Welcome to the monthly update, the first one for 2018. I hope everybody's had a happy Christmas and are flying into 2018 and getting ahead with those things that they wanted to get ahead with in 2018. We're already a month down, so if you made some New Year's resolutions like me, you're probably potentially already a month behind. I mean, mine was to do more exercise, and I can tell you that hasn't actually happened yet. If we think back, looking at the markets and things over the last month, we've actually seen, even only reported this morning, a little bit of a pullback in the US market after it's risen around about 7% in this first month of 2018. So it's been really strong, the US market. The Australian market, on the other hand, has been relatively flat. It peaked about the 9th of January and has come back a little bit since then, but we're pretty much at the same point today as what we were at the end of December in the Australian market. If we think about while I've been on holidays, I've probably had the opportunity to listen to and read more of the financial market information than I perhaps get when I'm not on holidays. There's been a few things that the financial markets that have been talking about, or should I say that the press have been talking about in relationship to the financial markets. I think the big one at the moment that seems to be on everybody's lips is cryptocurrencies and Bitcoin. For me, I take the approach with things like cryptocurrencies and Bitcoin. I take the approach as I do with other investments, and that is, first of all, if it seems too good to be true, it probably is too good to be true, and certainly the rise up of the value of those currencies has been significant, and the pullback more recently has been fairly hard as well. The other approach I take is that if I don't understand it, or if I can't explain it, then I personally don't like to invest in it. And unless you're a lot wiser than me in relationship to Bitcoin and cryptocurrencies, I find it very hard to get my head around exactly what's driving the price, and in fact then potentially what might drive the price down. So for me, it's an area of caution, because if it sounds too good to be true, probably is going to end up being too good to be true. The other one that's probably been in the press just recently is a report that came out in relationship to flipping properties. Again, that area shows that people have been making profit potentially in that area, but as property prices have stabilised, there's been less people in fact being involved with flipping properties. So what we've seen is actually in that report a pullback in the amount of property flipping that's been occurring. In most cases, people have still been making profit in relationship to flipping properties. In Sydney and Melbourne, for example, it's around 88–90% of all properties flipped have been done at a profit. In Adelaide, it's around about that 90% mark as well, compared to, say, Darwin, which is around 2/3, so around the 66% mark. Although what you need to understand in relationship to that data is that it doesn't include the costs associated with it. So it doesn't include the stamp duty or potentially the cost that you've paid an agent to sell that property for you. So it's an area that's slowed down, but that makes sense if you think about it, because if property prices aren't rising or they're flattening, then making a profit out of that sort of strategy becomes more difficult. A couple of other little ones to mention that have been in the press, or that I've seen in the press during my holiday season, is the issue around household debt. And I know that late last year we had some articles and some things around household debt rising. You'll notice that if you've been reading the press, that household debt in Australia is at an all-time high, and in fact we're one of the countries with the largest level of household debt in the world. The thing that's, to some extent, that's changed that and helped, I suppose, escalate that position for Australia over the last period of time is that they've actually also included debt that self-managed superannuation funds hold within that household debt statistic. And that equates to around 3% of all household debt. So that's actually escalated the position, even though the reality is that we still are sitting in a position where there's a lot of household debt. Interesting again, as I was driving in this morning, I heard on the news when they mentioned that the US market had come down in value overnight, that one of the catalysts for that occurring was a report that came out suggesting that there could be as many as 4 interest rate rises in the US in the next 12 months. Again, one of our earlier commentaries that were put out last year was around the possibility that interest rates can't stay low forever. I don't know when they'll rise in Australia. I don't even know when they'll rise in the US for that matter. But of course people get spooked by those sorts of reports, and we see that the market's reacting to them. The final one that I wanted to mention was the issue of superannuation. So one of the other things that's been occurring, or what I've read about in the press over this period, is this desire or this push towards topping up superannuation for low income earners. More specifically, really looking at the females in the workforce and suggesting that the gap between or money in superannuation or values of superannuation compared to the males and females in the workforce is significantly different. And what's being proposed and what's being put forward by some of the big superannuation industry bodies is that we need to look at how we can actually encourage and contribute into superannuation for those lower income earners. And there's papers and other commentary out on that at the moment, specifically looking at people that are earning below $37,000 per annum, and suggesting that the government should be looking to contribute up to $1,000 a year into superannuation for those people, as well as the incentives that they otherwise have from a tax perspective for either their spouse or themselves to contribute into superannuation. So that'll be interesting as that plays out to see where that gets to and how they try to actually, I suppose, equalise the superannuation pool for both male and female workers in the industry. That's it for me. Thank you for joining us, and I'll speak to you again soon.